Hi everyone, let's have a look at my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bearish scenario where we have been looking for a WXY, which is already finished as wave Y hit one of the common targets for a wave Y, which is the 0.618 trend-based fib extension taken from the low of W to the high of W to the low of X, and as you can see on the 1 hour, very nicely respected indeed. And we also had important resistance with the target box over here between 27.3k and 27.4k for then a potential rejection. And what happened on the lower time frames was basically the confirmation for a potential short trade, because I always say you want to look for some proof of support or proof of resistance, either a change in market structure, maybe a retracement and bearish divergences. And here on the lower time frames, what we got is of course a local change of market structure, but also bearish divergences on the CVD started forming at the highs over here. So these are these highs. We had the rejection creating lower lows or lower highs here on price, but on CVD we started to create higher high. So lower high on price, higher high on the yellow line CVD over here, creating bearish divergences for then eventually a move to the downside right at resistance, as well as the 0.618 target of wave Y. So that is very, very nice. And what is actually quite funny is that a member in Discord sent me this screenshot of a video I made 2 days ago on the 22nd of May, where I expected a move to the downside, then a move up to go to that blue target box, and then an impulsive structure to the downside. And then of course we have to wait and see how this is going to develop as well, because this trading setup and this scenario was already 2 days old, and at the moment that is basically what happened. So we had a move to the downside, move to the target box, and then an impulsive structure to the downside. So Elliott waves in a nutshell, very, very nice indeed. Now in the bearish scenario we expect a continuation to the downside, where an important support area for me is gonna be this yellow target box, which is sitting between 24,850 and 24.3k. and if I open a couple of the confluences that I have in that area, I have a daily at 24.4k, I have a daily naked point of control at 24,850, then a time naked point of control at 24.7k, and we have a weekly naked point of control at 24,850. So you can write those levels down on your chart as well, or put a target box in this area to basically say, hey, this is an area of interest. Now in the bearish scenario, we then expect continuation down. Of course, that doesn't go maybe in a straight line. It can of course go in waves, but in the bullish scenario, which is an alternative at the moment, we expect another move to the upside. So this at the moment is an alternative with wave W over here, and then a very long wave X, where this wave X is a W X and then an ABC expanding flat in then the wide wave Y, which ends or should end inside this target box between the 1.618s over here, for then eventually a continuation to the upside. Now I also mentioned that for this scenario the daily naked point of control is very, very important, because that is basically the only real support that we have around this area. And also for the ones that, and I mentioned it in the previous video, but for the ones that see it, I do not have any target box over here as I have in other places, for example, because I don't really see this as great or strong support. And what actually happened now is on the 1 hour time frame we closed below the daily naked point of control, kind of like back tested the daily naked point of control, and have another red candle coming. So that is of course not really what you want to see in the more bullish scenario, where then you expect another move to the upside in a wave Y to at least take these highs. But as it stands now, with this violent move to the downside, this is not really a preferred scenario and therefore an alternative scenario. If we then go to the micro time frame or the more local time frame, let's jump to the 15-minute. Then what do we see? Now we started this move to the downside in a nice 1-2-1-2 scenario, exactly like you want to see it. The second wave one taking the low of the first wave one, and also creating bearish divergences between the two wave twos, lower high in price, higher high in CVD, as I've already shown you. So that is very, very nice. Then we have this move to the downside, and it's always a little bit difficult to know exactly how far an extended wave 3 can go, because the blue count is the higher degree count. So we're looking for a wave 1, 2, then a wave 3, 4, and 5 in blue. But inside the blue wave 3, we are looking for another 5 wave structure, and then a wave 1, 2, then eventually a 3, 4, 5. Now this could potentially already be the end then of this blue wave 3. But that's of course the difficulty. A wave 3 can be very, very extended to much lower prices. So only the moment you're going to get a bit of a longer range, you can say, okay, potentially 3 is in, and now we're working on wave 4. So potentially on the lower time frames, this is a wave 3. This was then wave 4. This is potentially the white 5 to then end the blue 3. Now, when I look at the volume, the highest amount of volume currently is in this final drop to the downside. So preferably in a wave 3 scenario, I suppose, I would prefer another low to be made on a bit lower volume. One can argue, by the way, that if I zoom in, that this small low over here was on lower volume. But yeah, I preferably would see then another low on even lower volume, and that would then be the wave 5 low, let's say, for then the end of 3. But then again, a wave 3, very difficult to know how long it can go, because it can be very, very extended, and we just have to wait and see for a bit of a range on what is going to happen next. And that also counts for the more bullish scenario, where in the bullish scenario you of course want to wait for proof of support. You want to see a market structure change, bullish divergences, maybe going back above the daily naked point of control, and then create a market structure change, something that gives you confidence. And in this scenario we actually really want to wait for a bit of a range to get a bit more clarity on what might happen next, or how deep price can still fall in this micro bearish scenario. So in the bullish scenario, this is basically the move. This is kind of like the end, or almost the end, because the maximum target is the lower 1.618 at 25.9k, but it soon has to end for more upside, which of course you need some proof of support. In a bearish scenario, which currently fits nicest and is preferred, we have this 1.212 for then a bigger move to the downside, looking for that yellow target area here at the bottom. Important is that we have news coming later tonight. So we have at 8 p.m. Central East European time, make sure to check your time zone, we have the FOMC meeting minutes. No idea what it is, I just look at the red flags, and the red flags are high impact news flags, which can create volatility. Now, we already had a bunch of volatility today, of course, but make sure that around 8 p.m. tonight, you trade safe. Make sure you have a plan, make sure you have a strategy, because 8 p.m. can be, again, a very volatile moment on the Bitcoin chart. Then finally, let's have a look at the CVD divergences, because we had bearish as well as bullish CVD divergences. The bearish one over here was between the highs. Actually, you had bearish divergences between these highs, but you also had bearish divergences between these highs over here. And the target for the bearish divergences were these highs. Now, these highs now have been taken, so the target has been reached. Therefore, this bearish divergence can now be removed, because the moment that the low between the two highs creating the divergence has been taken, this is the main and first target, and then from there we have to wait and see what price does. But the target was this low, has been reached, so we can remove it now. And then of course locally we had some bearish divergences as extra confluence for then that push to the downside. We do have bullish divergences, but of course with the strength of this move to the downside, volume increasing as well in an impulsive structure, you don't really necessarily want to trade this yet. I prefer, no financial advice, but I prefer to see local strength and local bullish divergences for then maybe a potential move to the upside. But then again, at the moment it is not preferred. The first bullish divergence we had was between these lows, so a higher low on price, lower low on CVD, target being the highs over here. And now that price came back once again, you can see that on the 1 hour time frame we again create bullish divergences on the blue line. So higher low on price, much lower low over here on the blue line. But yeah, with the volume coming in and the structure of this move to the downside, again, I prefer proof of support. Trading is a discipline game, it's a patience game, and it is a stick to your personal trading plan game. So make sure you do that. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.